Hi there, this is Steve Place, the lead strategist at Market Traders Daily, and I've got a class with you in just a few days going over my investing methods and how I can identify and discover lesser known stocks that are set up for triple digit gains. And today I thought I would just give you a nice video talking about what I think is going to be happening going into next year. The election did hit. We're going to have an inauguration on January 20th. And the new administration is going to change some things that are going to drastically affect how the market trades. And if you think that 2025 is going to behave like 2024, I think you're going to be in for a lot of pain. So this video will show you what areas that are going to see a lot more volatility and risk and the places that you should be looking for opportunities. So first off, this is a chart of a heat map. And this shows us the weighting of the large stocks, okay? So if it has a bigger rectangle, it's going to matter more for the S&P 500 in this particular case. And so you've probably heard about the Mag 7. The Mag 7 are Microsoft, Nvidia, Apple, Amazon, Tesla, Google, and Meta. Tesla is less, this matters less, and it could actually be going to Broadcom, AVGO, but these are the big ones. These 7 stocks represent about 35% of the weighting in the S&P 500, and they represent about 50% of the weighting in the NASDAQ 100. And here's why this is a problem. The regime that is coming in is not going to be big tech friendly. JD Vance specifically has been anti-big tech. In fact, he has advocated for one of Biden's nominees at the FTC, saying she's doing a really good job with respect to the antitrust things. So what's been happening over the past let's just say 8 years now, is that big tech has gotten a hall pass from the federal government as to their anti-competitive and monopolistic practices. In exchange for that, and for the feds not going after them, they have been a de facto arm of the U.S. intelligence services, providing spying on U.S. citizens as well as censorship. Okay, now that agreement works really well when the people in power get along with the tech companies, but if you get a regime change, that's going to introduce risk. So right now, Google's Chrome might get spun off into its own company, very similar to what we wanted to do with Microsoft back in the 90s with Internet Explorer and Windows. Google owns a monopolistic, they have a stranglehold on the ad networks and ad pricing on the internet. Apple's got the App Store as well as the phone, and they're engaging in monopolistic processes with respect to taking a 30% cut of all digital sales on the App Store. Meta owns Facebook and Instagram. You could just go down the list. There's a lot of risks here. Now, it doesn't matter whether these companies get broken up or not. It is the perception of it, and that could lead to a change, a very fast change, in the liquidity of these stocks. If everyone starts to get scared that Google's going to take a hit from the Department of Justice, they're not going to buy the stock as much, and that can cause the stock to go down. And because there's such a large weighting in this market right now, that it could easily affect the indices. We could have a tech wreck, very similar to what we saw in October, December 2018, where there's just not as good of a bid in these stocks. And the same thing is with Nvidia. I don't think Nvidia is monopolistic, but everyone is stuck in the rear view mirror trying to look for additional upside on a company that is a $3 trillion market cap already. There are going to be better opportunities from a risk reward standpoint looking at individual lesser known stocks. And I think there's actually a very large risk with owning the indices going into the first quarter of 2025, just because of how top heavy those are. And if Apple takes a hit, or Google takes a hit, or Meta takes a hit, or perhaps all 3 of them at once, that's how you get a decent correction going into the beginning of the year. And the S&P is up 25% this year. Reversion's a very possible thing. So what can we look forward to? What are some of the areas that we can take advantage of? If you're thinking about chips and semiconductors, they might still work, but that was a peak narrative trade that ended in the summer of 2024. there's actually been underperformance of the semiconductors relative to the NASDAQ. So we want to think about where the puck's going, and that's the pockets of the market that are not popular right now, but I'm starting to see early warning signs in many of these areas that could lead to a very profitable first half if you look at these kinds of plays. So we're going to call these regime change profit centers. And the first one is going to be electrons. So the chips play and the semiconductors play was one of the best expressions of an artificial intelligence investing theme. So you couldn't buy OpenAI, you couldn't buy Anthropic, you couldn't buy Mistral, all the big AI companies. But you could buy NVIDIA because all of these AI companies use NVIDIA's H100 chips and all the others that led to such an expansion in the valuation of NVIDIA. All right, now there's other parts to the AI stack, right? You've got chips, you've got the applications, and there's some interesting applications coming out, but then you've got the base level stuff, the power needed. These things are very expensive. In fact, 3 Mile Island is getting restarted just to run an AI data center for Microsoft. Just one company is going to take an entire nuclear power plant and use it just for that. And then on the crypto side, you've got the demands from crypto power and blockchain power, which are going to drastically accelerate because the US is going to be more crypto friendly. All of this requires power. That's what the electrons are. It's electricity is moving electrons. And going into next year, it's not going to really matter what kind of power it is, all right? It's going to be all of them, okay? We're going to look at an example in small modular reactors with nuclear, but it's not just nuclear. It's going to be coal. It's going to be natural gas. It's going to be solar. It's probably not going to be wind because wind is actually awful. It's going to be the storage of the electrons in batteries. It's going to be the transmission of electrons in utilities. All of these plays that no one's really looking at are the ones that have very good risk reward in the future. So last year I spoke with Ed Kovalik, who's the CEO of Prairie Operating, which is an energy company. And I also spoke with Governor Rick Perry, and Rick Perry is very bullish on nuclear. If you remember when he was governor of Texas, they did this very large build out with wind energy, and they actually overshot wind energy to the point where if Texas gets too cold, the turbines don't run, and then Texas has its own independent power grid, ERCOT, and it just goes down every once in a while. So they got so over-reliant on wind that we're probably going to see nuclear start coming into play. So there's a company called SMR, New Scale Power, and they are positioning themselves to be the power generation source for new AI technology. And this company's up 339% from the recent lows. Just a very nice tag of the 200 exponential moving average in a liquidity pocket, and then it went straight shot up there. We're also seeing very strong rallies in uranium stocks and uranium material stocks, and I think that that's going to be a very good play going forward. Okay, electron capture and transmission right now are drastically undervalued, okay? If you look at solar stocks right now, they're trading like trash. And there's a lot of consensus that a Republican administration is going to lead to a drop in solar due to subsidies and everything else like that. But the economics of AI and blockchain tell us that we're going to need every single piece of power we can get. And this had nothing to do with who was going to be elected into next year. There was an inflection point this year. And if you go back and you look at the power consumption per person in the United States, it's flatlined. I'm going to actually try and pull it up really quick. Electricity consumption per capita, United States. Let's see if I can find it. So there should be a chart. I'm not sure if this is the exact one, but it's going to look something like this. The United States has not seen a new high in electricity use per person since the mid-2000s. All right, and this has actually been a huge pain in our side. We should have free energy, effectively. We should have 1,000 nuclear power plants. A lot of people say nuclear is dangerous. You got to remember that the United States has been building nuclear power plants. We've actually built 500 nuclear power plants, but instead of using them for baseload generation in the US, we put them on ships and submarines. So if nuclear wasn't safe, we are complete idiots for making nuclear subs. But nuclear's safe, it's fine. It's a solved problem, it's just now a political one. The next one is going to be fast healthcare. This is our second regime change profit center. And I was just recently in Scottsdale. I spoke with I'm going to get his name wrong. Hold on. Alex Dubranovsky. I think I got that right. He is a CEO for a company in Canada called Healwell AI. And they have access to all the data in the largest private clinics in Canada, which means that they get early detection and they also get early treatment options. But one of their revenue sources is helping pharma companies identify patients who are going to best respond to treatments. This is a very expensive process for pharmaceutical companies to do. Okay, and if we use AI as an application layer, people are going to get better treatments, faster treatments. Pharma is going to be able to move a lot faster. Now, I know into the next regime, everyone's scared about this guy, Robert F. Kennedy Jr. And he is, well, we won't say anti-vaccine. He just wants things to be proven to work, which is fair, right? So there are a lot of pharma companies, especially very big pharma companies, that are concerned that when he comes in, they're going to lose their profit centers. And the answer to that is, if you make a good product that actually works, you don't have anything to worry about. Now, on the other side, the head of the FDA is this guy. Can't remember his name. He's a doctor from Johns Hopkins, surgeon from Johns Hopkins, I believe, has some very good ideas. So for example, one thing that could happen next year is that we may not have FDA trials for all the drugs. If there is a company that already has a drug that is approved in the Eurozone, which already has very aggressive and overbearing regulatory needs for pharmaceutical companies, you don't really need to go through the FDA process again. So there might just be an instant green light for EU approved drugs inside of the US. It's that fast. Okay, so there's going to be a lot of plays in biotech. Now, biotech and pharma, they have not done well, and there's probably going to be, let's just say, a depression of valuations in the expectation because investors think RFK Jr. is going to come in and wreck things, which he might, but if you're a drug company that is making a drug that works really good, then you're fine. So if we look at XBI, which is a broad-based biotech ETF, this market really hasn't gone anywhere. It hasn't gone anywhere for 2 years. Because rates are high, okay, interest rates are very high, it becomes a little bit more expensive for these companies to finance drug trials. After COVID, it was harder to find patients to get those drug trials through. So there's been a lot of delays, some of them economical and some of them structural, that could simply go away. Okay, and there are plays in the biotech sector that are 10x plays going into an FDA event. So there's a lot of asymmetric risk reward there. The third profit center is going to be small defense. Okay, small defense companies. One of the sources of inflation that we've seen hasn't been monetary or fiscal. It has to do with the fact that we can't control naval shipping lanes. This is the Red Sea. And there's a point down at the Red Sea. If you see Djibouti right there, great name. The United States has military bases there. We've also been trying to control this shipping lane. Now, the problem is we've got the Houthi rebels in Yemen. And the really messed up thing is the Houthi rebels, which have been shooting at ships, in order to fight them, the United States has actually been funding Al-Qaeda to fight them, in some sort of stupid backwards idea that some idiot at the State Department has. Hopefully those idiots go away into 2025 and we just say, no, if you try and interfere with our shipping lane, we're going to kill you. Because that's what a Navy does. That's how you get global hegemony, okay? Because we can't get ships through the Red Sea, all of them have to go around Africa, and that leads to higher shipping costs, right? You also have the Ukrainian war, which Ukraine was like the #4 producer of wheat, and then Russia was like #7. So there are a lot of disruptions in the commodity space that could just go away if we just kind of fixed the global order right now. Everything's running hot. And some of that is because President Biden is not exactly in charge of our foreign policy right now. He's allowed people like Tony Blinken and Jake Sullivan to go absolutely crazy with their political ambitions and ideas, and it's not working because you have to have leadership at the executive level if you want to get things done. I'll get off my soapbox. You've got Elon Musk talking about how the F-35 is deprecated because of drone swarms. The Chinese military is building aircraft carriers, but instead of aircraft, they're drones. We also know that drones are working exceptionally well in the Ukrainian war. We've now seen things where you just get an out-of-the-box drone, you stick a grenade on it, and then they will fly the drone over a tank and drop the grenade into an exhaust, to the point that the Russians are now putting just sheet plating on their tanks. And it looks like something straight out of Mad Max. The defense industry is going to have to change drastically. Now, one thing that you have to understand is that back in the 90s, we had about 50 prime contractors, the really big ones. And these are the ones that work directly with the government. They get the bulk of the money and then they subcontract out, okay? There are now only 5 defense contractors. You've got Lockheed, Raytheon, General Dynamics, Northrop, and Boeing. All right, now I've worked for 2 of them. I actually almost worked for 2 others when I was an engineer way back in the day. These companies suck. They're not good. They're too big. They've had the DEI thing infest them, meaning that Boeing can't get planes off the ground properly. They've got quality control issues. And the needs of the Defense Department are not necessarily what Boeing and Raytheon and Lockheed can provide in a very fast amount of time. So the new guy coming in, the DoD guy, Pete Hegseth, hopefully will start to move things faster. And I think that we're going to start seeing shifts in the procurement process for the Department of Defense. We've already started to see it a little bit with respect to AI and procuring AI quickly because they know they have to move fast on that. But right now, for example, there's not a drone company in the United States that can spit out a bunch of drones. All right, the big one that everyone uses is DJI. Well, that's based in China. And if you're the US military, you can't have any drones with parts that come from a geopolitical adversary. So there's a lot of opportunities in this space. There's a lot of small defense companies that are going to work well. As an example, this is AVAV. This is a drone company inside the United States, 343% off of its recent lows. There are going to be some other spots with that. So you can actually go and look at aerospace and defense mid-cap stocks for some really nice opportunities. Okay, now here's the whole thing. Like, this sounds like I'm pulling this all out of thin air and it sounds good and it sounds like a guess. These aren't guesses. This is from my observations of predictive market flows. And these market flows start to show up about 6 months before these markets move. And we've started to see very distinct buys in utility companies for power, in uranium companies for energy. Oil companies are starting to see some very nice flows as well. And nobody's looking at these names. The oil services industry has been underinvested for about 15 years now. These names don't have a lot of investors behind them. And once the narrative shifts, all those investors that are in cash and bleeding because they're stuck in Nvidia and Google are now going to start looking at oil service plays or uranium plays and energy plays and defense plays because those are the names that are going to start running. And if you know about them before the move, you can position yourself into the move and you get much better prices than everyone else trying to chase. And that's the exact kind of framework that we're going to be going over in our class. I'm going to show you how I find these ideas, how I know they're predictive market flows, the back testing we've done, some case studies as well, and I think you're going to get a lot out of it. So I look forward to seeing you on the call. Make sure you show up early. I love questions, so make sure you got a lot of questions on board as well. I'll see you on the other side. Take care.